This is Adam Smith, the nationally licensed health insurance advisor, and today I'm going to talk about how health share plans work, or cost sharing plans. So all insurance, whether it's life, home, auto, health, all of it is based on a risk assessment. So the healthier you are, the less likely the insurance claim and the insurance company is to have to pay out claims. So the healthier you are, the better rate you get. So cost sharing plans, what they do is they group people, and these plans are health qualified, and those healthy people represent a lower risk. So that's how they're theoretically able to share costs. So the way it works is you self-pay your claims and then submit them for reimbursement. And then through voluntary gifts, which means the health share program tries to pool money from the participants and resources. Based on that pool of money, you could be reimbursed some or all of your claims, but usually it takes about 3 to 9 months. Again, for all your small claims, like, most of the time under $1,000, like wellness, things like that, those you'll all pay out of pocket. But then for your medium and large claims, you'll have to submit those for reimbursement. And again, those could be covered. We recently had a local family here in Utah on a health share program. They were out of town for a weekend, camping, riding ATVs. And the husband and daughter were on an ATV and they were in an accident. Unfortunately, the daughter wasn't wearing a helmet, which is against the law here in Utah. And so because she wasn't wearing a helmet and it was against the state laws, actually the health share program didn't cover it at all. So this family had to pay $800,000 plus in claims for this daughter who needed brain surgery. Both her and her father lived, but the family ultimately ended up paying for filing for bankruptcy from this accident. So again, these health share programs do take on a lot of risk because they don't guarantee coverage. And if it was due to alcohol, if you weren't wedded, if it was against the law what you were doing, then likely, if it's outside of those religious norms, then likely the claims won't be paid. So there are a lot of different health share programs. You may have heard of some of these, like CHM, Samaritan, Liberty Health Share, Zion. There are a lot of these companies out there. And again, they're not insurance because they're not backed by an insurance carrier. And again, they don't use these networks. Remember my other video that had the EPO, HMO, and PPO networks? Well, these don't have networks. So you have to be really careful before you get services done that this hospital or doctor will work without an insurance company. With these health share programs, they're not tax deductible. So because they're not health insurance, it's not a write-off. So that's another thing to really be careful of. About 5 years ago, the monthly premiums were very comparable with health share programs and the public market. However, then the public market got very expensive, and then recently the health share programs have become very expensive. We've recently seen a lot of families paying about $1,200, $1,400, $1,600 a month on a health share program. And then if you are on a health share program, keep in mind, you do have to be fairly healthy. The other way to use health to your advantage would be the private market, which is actually health qualified. These are guaranteed health insurance plans, and they are tax advantage, which means you can actually use it as a write-off for your business. And that's a good idea if you have an LLC, S Corp, 1099, contractor. And then with these private plans, again, these are the low deductible PPO plans, which could put you in a very good nationwide network. Again, with the health share programs, just remember, it's not a tax write-off, so it's not tax advantage. They don't guarantee coverage. They are good for some things. They are good supplemental plans. They're very good for maternity. Most of the time you'll pay most, if not all, of the wellness claims out of pocket. And then they are very good supplements for small surgeries. So say you were having like a broken arm, something like that, typically they're very good about reimbursing for those small claims. Again, just remember, if you do go that route with a health share program, you are taking on more risk. And you want to take a look at all the markets, because based on your health or your income, likely you could get better rates either on the private or the public market. This is Adam Smith, the Nationally Licensed Health Insurance Advisor.